Great. So I think we are live now. So hi, good afternoon, everyone. Thanks for joining in. This is your host, Rahul Chari. I'm part of NASSCOM team, and we work with startups and corporates and understand how we can support the ecosystem in the Indian startup scene. So thanks for joining in today. Today we have with us Rahul Chari, who is the CTO at PhonePe. Rahul comes with a couple of decades of experience spanning embedded systems, enterprise software development, e-commerce platforms, and apps. And today we'll be talking about innovation in payment space. Before we, get on to Rahul's insights on the topic, would just want to address regarding the NASSCOM India Fintech Awards. So this is the third edition of NASSCOM India Fintech Awards that we've bring to you, and this will be recognizing early stage startups, fintech startups across 6 categories, including payments. So we'll be sharing more about the awards and the process of it and how it can be a great opportunity for some of the founders. And now we'll go on to Rahul. So thanks, Rahul, for joining in. It's indeed a pleasure to host you today.
Thanks, Shivam. Great to be here.
Great. So Rahul, before we start with question and answers, I think everyone would want to listen to the PhonePe story. So if you could just start from that first day when the idea was discussed, and then at the stage where you felt as all your co-founders felt that yes, we've made it. So I think that story would be very interesting for all of us.
I think the second part is easier. I don't think any of us feel that we've made it yet. We are obviously extremely proud and excited about where we've got to. But we always talk about the fact that I think the easy part of the journey is what we really accomplished. The first 300 million users are the ones who were probably either already digitized per se or on the cusp of getting digitized. And thanks to Geo, were actually accelerated. It's the next 300 million or getting to the 500 million users that's going to be the tough journey. So we've definitely not made it. Cliched statement, but like everybody says, it's still day zero. I think the journey obviously has been incredibly rewarding so far, exciting and nerve-wracking to say the least. A little history about PhonePe. I think all of us come with background at Flipkart, and at Flipkart we kind of had 2 stints. We were working on Flight, which was a music download store and ebooks download store that many of y'all may not know, but Flipkart had back in 2012. And we kind of shut that product down because of the fact that microtransactions, we had tracks from all over the country, music tracks from Carnatic music to mainstream Bollywood music at anywhere between 5 to 10 rupees a track. And microtransactions were non-existent. From there started our journey about how payments, and unless payments was solved for structurally, India wouldn't move forward in the digital economy. Big Billion Day is another classic example where the payments infrastructure just did not stand up to the concurrency that we created in the first Big Billion Day back in 2014 and even the cyber sale in 2013. And obviously, as part of the supply chain ecosystem, I was leading engineering there. COD and cash collection continued to be a huge challenge. While on one side, it was probably one of the biggest innovations that Flipkart did in accelerating the adoption of e-commerce. The flip side to that was that cash was a pain to manage, to collect, to transport, to deposit, huge challenge. So I think that there lay the foundation of why we wanted to actually start PhonePe. And we felt that if there was an opportunity to structurally improve the way money exchange, whether it was peer-to-peer or person to merchant, money exchange at the most primitive level, if it could be solved right, I think there was the opportunity to actually accelerate the movement of India towards the digital economy. That was really the larger vision that we had. And we actually started on the PhonePe journey even before UPI, or at least we were aware of UPI. And it's almost like the stars were lined up. UPI was something that the India Stack team, Mr. Nandan, Pramod, and all were actually championing. And we got super excited, right? So from day one, we've actually been a payments container that has supported UPI, credit cards, debit cards, third-party wallets, the PhonePe wallet itself. But we went big on UPI and took a very, very large bet on it because we felt that this was the payment rails for the future. And I think after that, the demonetization event was a catalyst. The pandemic has been a catalyst in one shape or form. And obviously, the adoption has been through the roof. So we genuinely are super excited. We genuinely believe that it's not just an opportunity for us as a company, but now it's almost like a much larger responsibility that we have towards moving India digital, right? As much away from cash as possible, and to actually start getting more and more businesses who are purely offline today to come online and make the true O2O moment happen. So I think that's really our vision with PhonePe, and still a long way to go.
That's great. I think that's super inspiring, especially going through all the, as you said, the milestones, through the journey. And since you addressed the pandemic, it has been, I would say, difficult in terms of, how the society has seen this time. But obviously, it has also brought in some opportunities in terms of businesses, in terms of a lot of industries that were affected by the pandemic. But they in that result, we've got a lot of innovations, right? And that can definitely improve our lives in the coming times. So regarding in the pandemic in 2020, if I'm not wrong, PhonePe also started offering mutual funds and insurance products. So in that space, since now we are hopefully, we've seen the worst in the pandemic, and we can see the green shoots, we can see growth across the industry now. So what is your vision in general for the payment space, beyond PhonePe as well? Which are the products that will be coming up, which can be integrated within the payment space or payment framework?
Yeah, I think the pandemic, while it has been devastating, right? It's we hopefully have the worst behind us. We still have to be extremely careful about how we move forward. But like you mentioned, I think there are clear signs of recovery. If you look back, what the pandemic has really done is that most businesses are now almost all of them are technology businesses. Before the pandemic, there was a clear demarcation of businesses that were either offline only or businesses that were not necessarily looking at a technology transformation. And then there were businesses that were clearly online, and products that were purely focused on building technology platforms or building technology solutions. I think what the pandemic has done has completely merged the two, which means that every business today is a technology business, right? Everybody needs to be able to actually adapt. And the only way they're able to adapt in an environment where what the pandemic has shown is that everything as we do today could come to a complete standstill, and you should still be able to continue what you're doing. The only way that happens is if you do have a technology presence and you're able to adopt technology, right? Contactless payments is only just one example of the push and the necessity that the pandemic created. There are many such examples, whether it is in terms of commerce completely moving online, even for offline stores, whether it is about the need to actually invest in insurance products more from the perspective of genuinely protecting yourself versus an investment, right? That's been a complete change. Insurance products were sold as investment products, which is generally not the best way to actually sell an insurance or even a reason to buy insurance. And now that has taken the true meaning of what it should be, which is about either financial protection or protection towards expenses when it comes to your health. So I think what has happened is businesses have all realized that technology is the way to go. Consumers have realized that making clear investments in financial products or products that protect you financially are extremely important. So I think moving forward, if I take a larger view than just payments, I think financial services are obviously going to play a very, very important role from a consumer perspective as well as from a merchant perspective. We as a platform are extremely bullish and focused on financial services. We even before the pandemic, we had a very clear strategy about our platform. We used to call it the send money, spend money, manage money, and grow money. So send money and spend money was really what we had built and what we had actually invested in before the pandemic. Managing one's money and helping your money work for itself and trying to protect your financial future through insurance, through possibly the right lending solutions, as well as making important choices towards where you invest your money is something that we are focused on. I generally believe that over the next 10 years, a large part of the population is going to start looking at alternative ways of investment outside of the two big categories that Indians invest in, which is property and gold, right? Outside of property and gold, there is going to be diversification, and this diversification is going to be uh, uh, more broad-based. There is going to be much more retail participation of consumers in the equity space, in the mutual fund space, as well as other alternative investments possibly. So I think that's going to be a big part of our focus, as well as I believe a focus of a lot of startups that can actually make a difference through data, through personalization, and through actually trying to ensure that the products that are being sold are the right ones with the right amount of education and information, right? That can only be done through technology. If you don't have the layer of technology between the product manufacturer in this space and the consumer, you're going to have a fair amount of possible mis-selling or possible bias selling, if I call it that. Because ultimately, when you have an agent or a distributor trying to sell products, they will be looking to maximize their profit, given that the reach is limited, both reach as well as time is limited. And that may result in a certain amount of bias when it comes to the right products. So I think technology has that important role to play to make this much more broad-based, as well as to make it actually significantly more transparent to the user. And I think there lies a huge opportunity. Similarly, I think in the lending space, we've never been a country that has necessarily adopted credit cards as at the scale that the West has adopted. But I think, I don't think credit cards as we see it today are going to expand much further, but you're going to definitely see credit in many shapes and forms, whether it's going to be buy now, pay later products, whether it is going to be certain forms of consumer lending, salary advances, personal loans, etc. We are a very aspirational population. And now we will also become a population that is not just aspirational, but is also fairly well educated about how they want to actually spend their money, how they want to save their money, how they want to invest their money. And I think lending will play an important role in bringing those two together. So I think financial services as a whole is a fairly exciting space now. And I think over the next decade, I don't think this is something that is going to be very short-lived. And this is something that requires thinking over the long term. I think the next decade is going to be fairly exciting in this space.
Oh, very interesting. In fact, just to just sharing my thoughts as a consumer of these apps. I've been using all the apps that you would think someone from my age group or my background would use, right? Or a lot of folks who have joined also. We are part of that slice of population which is educated, which is working in a formal sector, and we have money to invest. But again, as you would understand better than me, that the information that we have or the knowledge that we have on investments is very low, right? Considering the kind of education we get in our various fields where we work in. Just to, before we get on to other themes as well, could you address on how founders who are building products specifically in payment space, and obviously they have to scale up at some point within other financial services or even within payments, there's a large chunk that still has to adopt it. What should be their approach in building the product, and plus what after that also, to ensure that one, they are able to make sure that customers understand the product and how they can utilize it at the fullest. Also, how they can make it easier and faster for even folks who cannot understand a particular language, or they are not very comfortable with the technology, and still the product should evolve at a stage where those folks can also use it, right? Ultimately you have to grow the business. So could you address this customer adaptation or customer adoption part from the founder's point of view?
Got it. So I think I'll try to answer that in with two lenses. One is from the lens of the kind of technology platforms you should be building, and the other one is the lens of the product and approach to product itself in this space. First, from a product perspective, I think it's extremely important to ensure that when you're working on payments and financial services, the opportunity is in the masses. It is in the Bharat, as we call it, and it's not necessarily on the metros, the tier one, and the possibly the crowd here, you, myself, etc. I think even if we don't have the right avenues today or the tools right now, if we do have the intent, we will find them, right? And I think we will make the right choices. So if we are necessarily building and we want to create an impact, we have to build with a view that this is going to be for the 200 million, the 300 million, the 500 million, right? We are a young population and it's going to be for the masses. So trying to keep these products as utilitarian as possible, I think should be one of the goals that you have. Being utilitarian does not mean that your product is not going to be successful, and I think that's generally something that most is a trap that most founders fall into. I think being utilitarian is actually okay. Secondly, I think there has to be a fair amount of investment that goes into ensuring that you don't throw the kitchen sink of all kinds of products for the entire cohort of users that you're catering to. I think it's very important to try and create sub cohorts in the population that you're targeting and try to figure out which are the right products for which cohort. Start their journey with them. It's important to actually understand that most of these users have probably not made a choice even on a single product. So trying to actually show them a bouquet of products that they can actually buy into in financial services is very, very intimidating. So it's extremely important to look at this from the lens of you being utilitarian and the simplicity of what you want to actually reach out to them with. Let them start the journey with one of the products that is right for them, and then let them see the value in that product, and then let them actually grow from there. I think that's a very, very important strategy. From an education perspective, trying to invest quite a bit in long form content, right? As a country, we are the largest when it comes to content consumption. Most of the people, given that the cost of data is the lowest, are consuming a lot of content, and they're consuming a lot of content for entertainment. Trying to actually weave in this education into entertainment and reaching out with a view of not selling the products, but with the view of educating the population en masse, and then expecting that there will be bleed over of that into your product if your product is the best one for them, is the approach that you should take. So I think there needs to be this whole investment as an ecosystem into education about financial services through long form content, and then let each one of the products win on the merit of whether they are simple, easy to adapt, and actually have value for the customer. So I think that's the right approach towards product creation that each one of us should take. From a technology perspective, I think one, I've always been large promoter of this thought process that there's no such thing as a free lunch, and there's nothing like quick and dirty when it comes to technology, right? Hustle in technology is really, really overrated. So when it comes to payments, when it comes to financial services, you must realize that you're dealing one with consumers' money and with their investments, right? So actually investing in platforms that are scalable in advance, so that when you start hitting that hockey stick growth that each of us as entrepreneurs is trying to achieve, you're not stuck in tech debt hell, is extremely important. Secondly, put in all the effort to ensure that you're compliant from the regulator perspective from day one. Compliance is not something that can be an afterthought in this particular space. So I think most technology entrepreneurs tend to actually take compliance a little lightly and feel that, you know what, we can address this later when we grow big. It doesn't work that way in the regulated space. And finally, more than even scale, correctness and integrity of data, reconciliation processes, reversals, refunds, allotment of the units, significant amount of automation in this space is the only way you're going to achieve the level of functional correctness that is needed. Anything that is designed to actually follow processes that are executed by an operations team in this space will fall apart as you scale, right? And in our country, you will achieve scale pretty fast. You need a very small percentage of the population to be able to adopt some of these services. But those absolute numbers are so huge that if you're relying on building an operations team and automating later, it's going to come and bite you badly. So I think investing in automation very early on, from the functional correctness of every process, the value stream mapping that you create of the end-to-end experience of financial services that you're offering to the consumers, you need to actually invest in automation very early on.
Yeah, and that's very interesting. In fact, I would say, Rahul, this was like last 2 to 3 minutes were really gold for any founder who's probably strategizing right now regarding scaling up and building the product as per the customer. I think that's very important to understand. So to address, the next theme, or just to go to the scaling up part of it, since you've addressed it a bit already. Just want to share with our audience as well that PhonePe started in 2015 with Rahul and his two co-founders, and as he said, it was before UPI. In 17, it was the first UPI-based app to cross 10 million app downloads, and it hit 1 million app transaction in a day. In 2019, it launches micro apps on the platform. In 2019, processed 2 billion transactions on the app. So there are various milestones and numerous awards along the way that you've achieved with your team. Now, in terms of as you suggested in some of your points regarding how things will play up when you scale up, if you could just elaborate specifically when we are talking about scaling up, what are the challenges for the founders? And this would be across the board. Obviously, technology is something that you will address, but beyond that also, if you could share that what are the other challenges, including technology, that founders have to keep on at various stages. And you can maybe take PhonePe's example, or you can give a generalistic view on what are those 3 or 4 areas that would be very important when you suddenly scale up from 100 to 2000, or x to 10x in a way.
Yeah, I think if you were to bucketize all the challenges, and this is whether it's PhonePe, whether it's financial services, whether it's payment, it doesn't matter, right? This is for any. I think in any consumer based startup, right? Any B2C startup where you're actually providing services to consumers, I think the challenges can be bucketized into one: scalability of technology, two is scalability of the org itself, which is basically people. And third one is basically the focus on what are the right opportunities. And I'll kind of explain these three. First, when it comes to technology, like I mentioned, I think having a very good idea of what is the blueprint of your technology platform very early on as a company is extremely important. If you have that, what happens is you have a fairly solid core. You have a foundational platform around which various solutions get built, and you realize that over time a lot of the key controls, the key capabilities are fairly centralized. If you don't have that blueprint, you'll realize that you've seen a level of success, but you have a fair amount of fragmentation when it comes to data intelligence, a fair amount of fragmentation when it comes to controls, and a fair amount of fragmentation when it comes to functionalities and capabilities. And it results in various kinds of issues that you may not realize early on, like being able to actually, let's say tomorrow the Data Privacy Act gets implemented and gives you a certain time window within which you need to actually adhere to it. If you don't have a well thought out blueprint from day one, you'll probably spend all the time that you have just trying to understand what is the mapping of the data in your ecosystem as soon as you've scaled. And that's just one example. So having a well thought out blueprint very early on really, really helps. Now, it doesn't mean that you need to actually invest in building out the platform exactly like that before your first product launch. You could actually map out a POC or early version of the product, MVP, before building out the blueprint, but actually plug away at building out the blueprint over time really helps. Second one is on the org design itself. I can't impress how important this is, that early on to try to actually have an org design. An org design is not about titles. An org design really is about what is the right form of organization that you want to build to be able to actually cater to your own ambitions. I'll take the PhonePe example here. We actually had the vision to paint on a really, really broad canvas, right? If you look at send money, spend money, manage money, and grow money as our journey, our opportunities exist on peer-to-peer money transfers with domestic remittances, gifting, unorganized settlement of money, etc. On the payments, obviously, it is in-app payments for recharge, bill payments, switch applications. There is offline payments through QR codes, and then there is online payments on Swiggy, Dream11, Flipkart, etc. Then there's opportunities in the financial services space. There are multiple categories that you can find inside the PhonePe app, like credit card repayment, FASTag, etc. Right? So if you now map the PhonePe opportunity, you will see that there are multiple companies that we actually compete with. There are multiple startups that are focusing on one category or one of the many problem statements that PhonePe is looking to solve. How do I stay nimble enough to be able to actually compete with the next startup around the corner, or a new startup that has been in existence for the last 2 years, while actually continuing to operate as this mid-sized company that is driving north of 60 million transactions on a daily basis? So we chose to organize ourselves in what we call as pods, which is almost like a set of companies within the company, a full-fledged function, as long as the charter for that function is well-defined and has at least a year or 2 years of runway, as we call it, from a roadmap and goals perspective. We actually create a full-fledged function of engineering, product, business, with leadership around it, and say that this is a pod, and they operate like a decentralized startup within the company. Now, this is just one of the choices that we have made, but trying to actually have an org design like that, and then hiring with that org design view fairly early on for founders to be able to actually take org design and decentralization of decision making within the company early on is very important. You can't leave it to be done later, right? And the third part really is about focus. And it's slightly counterintuitive to the previous point where I said that we paint on a very broad canvas, but we also serialize a lot of opportunities that come to us. I think most of the time when I talk to a lot of startups, the thing that they're grappling with is as soon as they start seeing a fair amount of success, the number of opportunities coming at you left, right, and center is humongous, right? You have possible partnerships with a set of startups. You have possible partnerships with some large companies. You have a strategic investment opportunity that you can actually build a new product for. Everything looks exciting. And most founders actually get into the trap of trying to do all of it almost at once. And the pressure is felt by the company as a whole in multiple ways. You can get interpreted as not having a clear direction or strategy. You can have burnout among people. You can have a lot of knee-jerk reactions based on competition, etc. Most of us are in a hyper-growth environment because of the phase that India is in from a technology transformation perspective. So I think there are some hard decisions that founders need to make about stack ranking their opportunities, letting go of certain opportunities and serializing some against others, and choosing to play in a few areas, but going fairly deep, waiting on some ideas until you're able to staff up right for them, create a pod like in our case, and saying that it is okay to enter next or second or third in a particular space. I think having that mindset of prioritization when it comes to your opportunities, by the way, this is not product prioritization, this is not OKRs, they come next. This is just about opportunity prioritization. And I think doing that very early on is extremely important for founders.
No, very interesting. In fact, the example that you shared regarding the pod, right? I think that that gives a really nice perspective in terms of how do you, as you said, like you have to choose your opportunities. So, how do you really choose the right one and also build the org around it or for it specifically? And, that's the way to kind of, I would say, scale up things also, right? So very interesting, insight there. We've got one question already from Kanchan Dwivedi, who's founder of Loan Guinea. She really likes your talk. She's saying it's such a fascinating talk, and she's proud of the PhonePe UPI success story. So she has a question, which I think I'm sure like you might answer it differently every time that you get that. So it's about what helps you in your challenging times. Is there an entrepreneur that you admire and why?
Hi, Kanchan. Thanks for the kind note. I think when there are challenging times, there are different things that we fall back on as entrepreneurs, but one of the only constants is basically our team. I think if I look at all the challenges that we have faced in our journey, and there have been many, right? The Yes Bank moratorium is one of the most spoken about ones, right? I think the only thing that actually gets us going through the most challenging times is a team that is extremely motivated, a team that has an extremely high level of ownership, and a fair amount of decentralization when it comes to execution and decision making. Uh, Otherwise, what happens is founders are mortals as all of us, and time in many times we also get overwhelmed. But having a team around you that can reassure you about the fact that don't worry, we have your back is as important as us having the back of our team, right? So I think the most important thing for us is a great team, and I think that goes down to what are your first 20, 30, 40 hires that you make as a founder extremely important, because after that, after the first 50, after the first 30 maybe actually, the team that starts growing is a reflection of the 30. It is a reflection of you start getting into the first factor, the of association starts with the first 30, and after that it becomes a second factor, possibly a third factor of association as people come into the organization. So to ensure that the first 30 have values that are fairly common and shared values, that they're all missionaries, they're bought into a much longer vision about how you want to actually build the company, where they have added to that vision and therefore are as much a part of the founding team as anybody else, is very important, right? In terms of entrepreneurs, many of them, I think Sachin and Binny at Flipkart have been an inspiration for a lot of us. I mean, if you look at it, the Flipkart cadre of companies is fairly large, fairly successful, and I think we owe it a lot to Sachin, Binny, and a bunch of others and the Flipkart group, whether it is Amod, Sujit, VG at Udan, right? Ankit, Mukesh at CureFit. I think we owe it to a lot of people around us who are extremely ambitious, extremely smart, and didn't let any of the challenges ahead of us, whether it was the lack of infrastructure or the lack of capital at many points. Like capital has become now a least common denominator that everybody has, and there's the other challenges. But there are points at which even capital was challenging. I think none of that could deter anybody. So I think the Flipkart ecosystem, I take a lot of pride in having been part of that university and look up to a lot of people there.
Right, and as in the popular terms we say, the Flipkart mafia, right? There are founders across industries, across the spaces, and obviously, it tells a lot about the culture also, that whoever
Yeah,
has started out in something different, these have been brilliant ideas, and obviously, they've kind of in general, Flipkart has been that, the big one when it came to the start of Indian startup ecosystem. So that's been really inspiring for everyone, I'm sure. So we have another question from Sharon, and I'll encourage others also, since we are in the second half. So if you can ask more questions, Rahul will be able to address them. So Rahul, we have another question from Sharon, who says scope of AI and predictive analytics in future of fintech, and I would say, like, if you could address payments specifically as well, in as in PhonePe, or as well as in general in the payment space.
got it. Thanks for the question, Sharon. I think the scope of AI and predictive analytics is huge and already being utilized in multiple ways even today. For example, at PhonePe, we use predictive analysis fairly extensively to actually predict the success rate of payments. And we have a system that actually we prefer that a payment does not go through for a consumer in case it is potentially going to fail, versus try and actually get an additional transaction from the consumer. So we actually play it on behalf of the consumer in terms of if the success rate, whether it's going to be a latent payment, whether it's going to be a payment that is possibly going to get stuck, or if it's a payment that is going to actually take a fair amount of time to reconcile. we actually do use predictive analytics at scale in a real-time system to actually ensure that we don't let the payment go through, or we actually give a warning to the consumer. That is just one example of how we actually look at predictive analytics. Predictive analytics can come into play in multiple other areas. Investments is a great way in which actually I do believe that as, like I mentioned, as a large part of the user base starts dabbling in investments, whether it's equity, whether it is mutual funds, right, or more equity, as you see the retail participation go up, I think advisory and robo-advisory is going to play a very big role. And robo-advisory is really a fair amount of, I would say, predictive analytics about market dynamics and where investments based on the risk appetite of a consumer, which again should be something that is derived knowledge versus the typical method that we have today, which is about asking questions like, are you a conservative or an aggressive investor? Do you see it for the short term or the long term? None of those questions are going to work because the population is not going to be able to even put their neck out and say we're going to be aggressive investors who will take a long-term view to their own money. Their answer is going to be that we are conservative and we're going to take a short-term view. So you need to actually have a significantly more nuanced view of where the consumer lies in the spectrum of their risk appetite when it comes to investing, and therefore what the investments should be. So overall, I think in general, in payments as well as financial services, specifically investments, I see predictive analytics and AI playing a really important role in the future.
Yeah. Rahul, I think we have a whole list of questions for you to answer, and some of them are repetitive. So I'll try and try and combine the questions that we have for you as well. So Arihant has asked regarding the threats that you see specifically for PhonePe, but I'll say in the payment space in next 2 to 3 years, or I'll put it as Rahul, that what are these challenges that you see in next 2 to 3 years, which obviously can become opportunities for the payment space. And I would also call it as factors that you see will shape innovation in this space, in the payment space.
Got it. And I think that combines the emerging fintech technologies that I think Kanchan has also asked.
Yes.
I actually don't see any specific threats to digital payments per se anytime in the near future or in the medium term. Mainly because of the fact that the percentage of the population or the percentage of transactions that are going digital as compared to cash today is still extremely small. Cash is still huge. And all of us, whether we are competitors in the space or whether they are policymakers, whether it's the regulator, the larger goal for all of us is to see how can we actually expand this pie of digital payments. And therefore, if you take a macro view, there aren't really any threats. I mean, threats come from either competition, they come from regulation, they come from policy, right? If you take a broader view, all of us are actually aligned on the fact that we must take digital payments significantly ahead, and we need to actually reduce the burden that cash is causing on the economy. So I think from that perspective, there aren't really any threats. I think the challenges, and this will be much more in the near term that I see, is the fact that our investments in risk and fraud detection systems needs to actually keep going up as an ecosystem. The first 100 million, fairly educated. The next 100 million, first time into digital payments. Some of them learn the hard way. Our systems also mature across the board in terms of being able to actually help them not get into any sort of fraudulent transaction, right? And this is all social engineering fraud. This has nothing to do with security risks or fairly sophisticated engineering we are talking about. These are pure social engineering frauds that take place across the country, right? And I think with the newer population that is going to come on board onto digital payments, our responsibility towards, again, using data much more effectively from a predictive angle, lot of lead indicators of potential fraudulent transactions through social engineering and preventing them is the larger responsibility that I see, right? You can't have the next 100 million users come on board and then being affected by a higher level of social engineering fraud and then therefore being turned away from digital payments. That's actually taking a step back. Therefore, that I believe is something that we across the board, whether it's banks, whether it's the fintechs, whether it's NPCI, have to be making a much larger investment, and we are doing that, right? So I would see that as one of the challenges from the payments lens. In terms of technology itself, I am actually super excited about blockchain technology. I'm less excited about crypto. I'm definitely excited, but not as excited about the usage of blockchain technology, because I think in the larger scheme of things, the amount of attention that crypto has garnered, or the imagination that it has captured, has kind of diluted the value that we can actually extract from BLT as a whole, right? Whether it comes from being able to actually issue policies that cannot be tampered with, whether it comes from KYC for customers being done one time that is immutable, and being able to actually refer to that in a manner that it can definitely stand the scrutiny across any regulator. There are immense number of opportunities that blockchain technology offers that is not being necessarily looked at because of all the attention or imagination that crypto has garnered, right? So I think BLT and use of BLT across the board in financial services is something that I'm definitely excited about, and I believe that we will see quite a bit of change through that.
Sure. No, that makes a lot of sense. In fact, crypto had been one of the areas that we have seen a lot of focus on in terms of a lot of, I would say, companies, investors, startups across the board, right? In fact, blockchain was one of the most talked about thing in 2018, and then suddenly we saw that ultimately it was difficult for corporates to understand how it has to be implemented. So it took time to kind of adopt at certain level. And as you said, it's still very underutilized. The whole
It's
BLT
still
part
early
of it.
days for the technology
Yes,
itself.
yes,
And I
yes.
think it'll start playing out once the euphoria around crypto kind of stabilizes. Not dies
Exactly.
down, but stabilizes. Yeah.
Right, right. So we have a couple of questions which I think you've already addressed, where Rajiv asked regarding ease of doing business and fintech space for startups while navigating regulatory environment. I think you've already addressed it in this answer. And Rohan has one admired UI of PhonePe as a customer. He's sharing his feedback, and he's also asked about the changes that you see in the customer behavior over the last decade in using your platform. I think this is an interesting one that you can address.
Yeah. Rohan, thanks for the compliment on our UI and UX. We'll definitely pass it on to the design team at PhonePe. I think one of the things that was a significant learning for us is the level, especially with the recent pandemic, the trust that we have garnered as a payments platform, and how easily it actually translates into financial services. The extent to which we see users from tier 2 and beyond buying their first 0.5 grams or 0.05 grams of gold, right, is huge. Them buying sachet products and insurance, them actually trying to actually buy one unit, couple of units of mutual funds. I think the ability to actually get trials from users in tier 2 and beyond on the back of the trust that we have actually garnered as a payments platform was extremely gratifying, surprising as well as extremely gratifying, right? It just increases our sense of responsibility when we're putting products out there, and also ensures that we start thinking from the lens that these products are genuinely now designed much more towards that population, because we believe that the tier ones and the metros will adopt it anyways. That has been a change from our end, where our focus has become significantly more broad-based. The previous thinking used to always be about the fact that products need to actually start getting trials from the metros, tier ones. Then you find the right product market fit based on that feedback, and then you actually take that product much more mainstream for the broader base. Now that is getting challenged because, again, because of how aspirational our population is, and the fact that they've got comfortable thanks to payments, possibly because payments is so broad based, and thanks to content consumption with Geo and Airtel, etc., actually floating the prices on data. That population is actually extremely trial driven. They're also fairly unforgiving, which means that they'll give you the trials, but if you don't really stand up to those trials, they will actually find the next product that is better out there. So I think we need to stop building products where we test the market with just a metro and a tier one and start building for the broader base and actually build with that view. And that I think has been extremely gratifying for us.
Right. No, that's super important. I think this point needs to be, reiterated again and again, that ultimately you have to consider that now beyond metros, that aspirational audience that we have, or the population that we have, is probably in some cases consuming far more content,
Yeah.
using internet a lot more than the folks in the metro cities.
Yeah,
So
yeah, and
that,
the assumption that they come
yeah,
on board once the product matures is actually out of the window. You have
yeah,
to assume that they are coming on board on as the beta user.
yes,
But if they're coming on board as the beta user, your responsibility in terms of that product being significantly better than the typical betas that a lot of companies put out there
right.
uh, is higher. Yeah.
And I would assume, Rahul, and this is just off the cuff, like I don't have data for this, but I feel that folks from the tier two, tier three cities, if they become your like loyal customers, they can actually get you far more customers than someone from metro would, or they are the ones who will propagate the product a lot in terms of getting you new customers as well.
I think there are two aspects to it. One is loyalty itself.
Yeah,
Loyalty and to a product is actually significantly higher when it comes to tier two and beyond. In terms of revenue itself, I think revenues typically tilt much more towards the metros and the tier ones today. But I think the numbers will significantly make up for that over time when it comes to tier two and beyond. So I think there are two aspects to it. One is usage, and the other is revenues. I think usage-wise, loyalty-wise, word of mouth, we've had actual villages getting PhonePe-fied, as we call it, just because a few members found the product to be extremely useful, and they've actually sent testimonial where they've actually gotten ahead, reached out to us how the QRs can be put up. These are really small villages, Northeast and other places that we actually have testimonials saying that we have transformed this village using PhonePe and digital payment acceptance, right? Now, you won't get that kind of love and loyalty from a lot of uh, the metros and the tier ones.
right,
Revenue
right.
will come over time, right? And I think that's
Obviously,
the long
yeah.
haul.
Yeah, no, very interesting. So we have another question from Supromojit. So he's building a new bank for targeting a particular sector. They validated the idea, and they want to know, what kind of steps need to be taken, where to partner with a bank or building products. And I'll add to it, Rahul. So a lot of our audience would be, or a lot of folks who apply for India FinTech Awards, they will be B2B startups. And I'm sure, like with PhonePe, while you have B2C segment totally, but you're also partnering with certain other either banks or companies or startups, right? So that B2B element is still there in this space as well. So what would be your advice for B2B founders in the payment space if they are building a point solution or something that will maybe cater to what PhonePe does or a bank does in payment space?
Yeah, so I think whether this is going to be something that you actually take directly B2C as a product or you actually work B2B through a bank is a choice that you make as an entrepreneur based on one, what is your own vision for this product and the platform, and two is effectively the approach that you're much more comfortable with. I think B2B products take a significantly longer gestation period before you're able to actually get the product through a partner to the point that you're able to actually continue to build on top of it. But it's also a business and an opportunity that is significantly, I believe, more sure than a B2C. B2C obviously requires a fair amount of capital. The cycle, the build, measure, learn cycle of being able to put a product out there and get some feedback, get some traction is much shorter, but it becomes a distribution challenge when you're looking at building this ground up without any partnership. So I think from a B2B perspective, if you are on the B2B path, I think especially with a neobank, partnering with a bank that is able to envision how to push the envelope in the banking experience significantly is extremely important. you need to actually have a fairly shared vision about the product experience and the consumer experience that you want to create. And they should be invested in pushing the envelope over what we today have as a banking experience, right? That would mean that they need to be invested in being able to actually build out a fairly intelligent middleware. A neobanking is really a middleware and a UX on top of core banking systems. Now, that middleware cannot be just a API over CBS to build a better UI. What it needs to be is an intelligent middleware that is able to actually use data effectively, try to drive personalization, be able to actually consume the data, store the data in a manner that the experience is better, as well as utilize the data to ensure that a lot of the flows, even if they are flows for commonly used interactions today, are significantly simplified. Unless the bank is invested in building this middleware with you as a thick, intelligent, and a middleware where most of the interactions are terminated and not everything is necessarily going back to the CBS system, you will probably not be as successful as a neobank. At least that's how I think about it. Therefore, choosing a partner that is invested with this lens about building an experience that is truly transformational and not just building an API layer over an existing monolith or banking experience, I think is the lens to take.
I think you've literally defined the whole neo banking space very clearly on what it would really mean when you talk about innovating in that space and not just adding layers to as you said, the monolith. Since we are in the last 5 to 6 minutes, I'll just share with all the audience members. I've shared the link to NASSCOM India Fintech Awards. This is for early stage startups. If you've found your company after 2018, you can check out all the opportunities that are there in 6 of the categories, one of which is payments. So before concluding the session, Rahul, just for the audience, especially the founders that would be applying for Fintech Awards, and with NASSCOM, we would be supporting them throughout the year, in fact, to connect with investors or corporates, companies like PhonePe, to figure out if there's any synergies for them. What would be your, last key takeaways in terms of one, the future that is coming up in this space, and second, as a founder at a personal level, what would be your key point to them in terms of how they should spend their every day, especially in this early stage phase? How should they start their day in terms of their thought processes?
So I think when it comes to fintech itself, my personal belief is that the opportunity lies in the significantly broader set of users and not the top 25 million, 30 million, 50 million users. So I think one of the things I would actually definitely look at is, is my product and my solution applicable to the broader set of users, and what is going to be my strategy to reach them? I think that is extremely important. Everybody doesn't need to be a phone pay that is going direct to consumer with brand marketing, TV, etc. There are multiple ways in which you can reach the masses. You could take an offline route, you could take partnerships, you could take different approaches. I think focusing on, is my product applicable and does it solve a problem for the masses? And if so, what is my GTM to reach that? Not today, not tomorrow, but over time. I think I would just continuously think about that, problem solve towards it. The second one is completely on focus. I think the first few years, like I mentioned, is all about learning on the fly. There will be a lot of pivoting opportunities. At the same time, there'll be just too many opportunities hitting you. Try to choose your pivots right and try to actually focus on a fewer things and go really, really deep. Many times in the fintech space, value gets unlocked as you peel the layers of the onion. For example, in neobanking, as you actually integrate deeper with the bank, you will actually realize there are different opportunities to solve for, which are not being catered today. But that's not going to be something that comes to you out of the blue. It is going to be about trying to understand the CBS system more deeply, trying to understand their own processes a little better. You could actually focus on one particular space. It could be Forex, it could be remittances, it could be any one particular area where there's a significant opportunity to improve it. So I think choosing few bets and going deep in the early years actually pays dividends over the long term. So I think that's one of the ways in which I would spend my daily day as a founder while the BAU continues to actually run.
Right. No, those are indeed golden words. I think that you've really summed up, the way founders should look ahead in their early days, especially like the first 2 to 3 years or 5 years. And I'm sure, all the audiences would appreciate all these insights and would have got a great knowledge, through this session itself. So Rahul, thank you so much for joining in. We'll end the session now. And we'll also share, I think one of the audience members had asked regarding the recording of the session, so we will be uploading the full video, and also we'll be sharing some of the clips also with the audience members, so that you can go through these insights again. So
Thank you
thanks,
so
Rahul,
much.
for joining in. It was indeed a great pleasure to host you, and thanks for sharing all these insights.
Thank you. It was a great time.
Thank you
Thanks a
so
lot.
much. Thanks, Rahul. Thanks everyone for
Bye.
joining in. Thank you.